So this is
Great.
Sal Barnes. He's managing director for MPG. He's done all kinds of great economic analysis, public policy consulting projects. He's done work in North America, Latin America, Europe. I could go on, but I think everybody is really probably very curious about what you have to tell us about who's winning in cannabis, why. So I'm just going to mute myself and turn it over to you, sir.
Great. Thank you so much. That's going to be a tough act to follow. That was some great music we heard right beforehand. And just to let it be known, I am wearing my Texas NORML shirt that you sent me. So thank you very much. So my name is Sal Barnes. I'm with a company called MPG Consulting. And essentially, we are a strategic advisory firm in the cannabis and hemp industry. Just a little bit of overview of who we are. We have worked with public clients in 27 states and 7 countries, helping set up and analyze medical and adult use cannabis markets, basically in North America and in Europe, as well as work with some of the leading multi-state operators, large independents, institutional capital players, industry groups, Native American tribes, you name it. If they're in cannabis, we have probably worked with them or in a market that they're in. I think one of the things that gives us a really great insight into what's happening in the market is we are consistently the lead market analyst for the state of Colorado's marijuana enforcement division, and we've held that title since 2014. So we get to see, how the world's first adult use market has developed over time and how regulations have developed over time in that market, and what that sort of serves as a petri dish, right, for the rest of the United States and then also the world. We were instrumental in helping set up Canada's program through Health Canada and did the first serious demand study for that country, which basically served as the basis for their licensing structure. And, in general, we've worked with, I think, 6 multi-state operators since they were beginning to help them sort of grow their business and even move internationally. To the point of my discussion today with you guys, and I appreciate you taking some time out of your 420 to listen to us speak, is to let you know kind of what's going on in the overall cannabis market and who's winning under these current conditions, and then sort of give you some flavor as to how COVID has impacted the market. So we'll start right in with the current market overview. And, this isn't to be too doomsday-ish. This is just sort of the way it is. I know that we will recover for this, but essentially the party is over. And what I mean by the party is over is that the term, the green rush, is done for now, right? We've seen in the past 3 years, 4 years-ish, a lot of capital coming from various sources into the industry. A lot of hyper growth. Some of these MSOs have gone from state to state to state to state very quickly. There's been acquisitions in the $500 million range. However, that growth, although rapid, was not backed up by financial performance. As you can see in this table I have to the right, and this is of April 9th, 2020, these major publicly traded companies, Ianthus, MedMen, Harvest Health, Cresco, Cureleaf, and GTI, have had massive drops in the price of their stock from their high. In some cases, over 90% drop. What that's done is that's created an extremely difficult market to raise capital in across the board and across the value chain. Right? Credit extensions have ceased. Debt rates are extraordinarily high. Stock prices has plummeted. And these factors combined with weak balance sheets that we're seeing in the industry are really prohibiting further growth, right? Companies are shifting from a growth model to a survival model. The main indicator that everyone is looking at right now in terms of who's the healthiest, who's going to last, and who's going to be the winner is positive free cash flow. Positive free cash flow is the ability is the main indicator to prove that these companies remain profitable and stand alone on their own operations and not rely on other forms of investment or capital structure to keep going. Now, one of the challenges that everyone in the industry is facing, whether you're in Colorado, you're in Washington, you're in Texas, regulations aren't helping. We just haven't got there yet. We need those to become more favorable. If these companies are to have enjoy any sort of benefits from true economies of scale, we have got to see federal legalization and regulation become a priority. It's just hampering. Right now, if you are a multi-state operator in 5 states, you are essentially 5 different companies operating under the same flag, and it's virtually impossible for you to share in the benefits of having that scale. There are no economies of scale. Plus, if you are public, you have that much more regulation on you. You have that much more cost. So the biggest hamperance in my mind right now is we need access to safe banking. We need companies to be able to access the public markets in the United States. Currently, if you are a public company, let's just say like a GTI, you are listed on a Canadian exchange. You're not listed on the United States exchange, and that's per SEC rules. We need to see the tax implications that these companies face to be way less burdensome. 280E is a prime example, right? These regulations have got to sort of get in lockstep with how the industry can grow, or we won't see it grow. That is the Achilles heel right now of this industry. I think there have been some mismanagement by some of these big companies. I think they grew a bit too fast, and I think the market didn't catch up. But a lot of this is on the regulators to make this industry, an actual industry. So now that we know that, let's just talk about who's winning and what. So 2 years ago, 18 months ago, maybe even 3 years ago, the Canadians had this competitive advantage, right? Like they opened up this market and they flourished, and they were able to have all this capital. They were able to go public on the US markets. They were able to raise equity. They were able to expand. They were looking far away, even to different markets in Europe. They invested a lot in Colombia with the hopes of exporting. And you know what? It just wasn't there yet. They just went a bit too fast. Because of that, their prices have dropped. Their stock prices have all dropped. Sales has not, and profitability has not caught up with the previous valuations of these companies. And so they're really starting to hurt right now. One of the ways that they were going to increase this expansion strategy was to get into hemp in the United States. Well, as we all know, last year hemp crashed, and specifically consumer-derived extracts for hemp, right? Like your CBDs. That crashed. It just didn't turn out to be the answer that the Canadian LPs, they're called, were looking for. So now, who does that leave left? Well, that's large companies with high levels of cash that allow them to sustain for several months a burn rate at historical rates. So if they're able to keep the engine going with how much they have in reserve, they're in a good position. In open license states, I think it's small and mid-sized private companies that are well defensible real estate positions. When you really boil down to it, on the retail side, it is where you are at, how much traffic is in front of you, how many people cross your street or walk by your store every day. And think of it like this. For example, if we think about Texas, most of us in Texas will go to the closest, nicest liquor store towards us. If the closest one is kind of crappy, we're not really going to go there. We may go another block or two, but we're not going to go 3 miles out of the way to the nicest liquor store. Same thing applies for retail dispensaries, right? Everyone has their favorite one. It's usually the nicest, closest one next to them. In limited licenses states, so this is not in Oregon, right? This is in Ohio. Let's think about well-run, vertically integrated private companies who are growing at a strategic pace. What I mean is they set up a cultivation, they have a dispensary attached to that cultivation, and they are growing the proper amount of cannabis to supply that dispensary. And basically, as the dispensary demand grows, they grow more, and maybe they build another facility, but they entrench themselves in their current market before they look to expansion. Those companies are doing really well. Those companies are also overwhelmingly private companies right now. It's pretty hard, and there are some that are doing well. It's pretty hard to find a public multi-state operator who's doing really well. So anyone who is really focused on edibles across markets is doing better than other products. This is a repercussion of the vape crisis that we had last year. I think maybe crisis is a different term. We shouldn't use the same terms in terms of the COVID crisis. But What happened with vaping last year did put a dent in the industry and actually manufacturing products. Also, if you think about that related to COVID's potential for the impact of lungs, I think vaping is going to have a tough run coming up. Brands still have limited importance amongst consumers, excluding some edibles. There are some very strong brands in the market, very, very strong brands in the market, but that is rare. And that cannot be, as we discussed earlier, spread across nationally. It's only state by state, market by market. So your brand reach is just as big as the current market you're in and not necessarily the national market. It doesn't drive as much buying as brand does in the liquor industry or the beer industry, for example. Now, if regulations ease up and we can start enjoying economies of scale nationally, brands will play a much more important part. But right now, brand strength is something that's struggling. And I think winning, obviously, is operators in legislatively friendly states with proper licensing structure and effective enforcement to continue to be most profitable in the industry. Simply said, if there are enough cultivators and retail outlets, to meet the cannabis demand, and there is enough enforcement and resources of enforcement behind that, the industry is going to do pretty good. If there is not, it's going to be pretty struggling. I'll give you an example. In Colorado, there's proper licensing structure, proper retail outlets, and demands, and the total cannabis demand is pretty much taken up by the legal market. On the flip side, in California, they're having some troubles, both with supplying the illegal market demand and also with enforcing all the enforcement of that. So the states who have set up from the beginning well, those companies operating in those states are going to continue to do well. And now, lastly, I'll just talk about the impact of COVID. Pricing pressure is different in every market. Colorado is feeling downward pressure on wholesale prices, while Oregon is seeing a rise in prices. Tourism-based markets are feeling the hit. There are SPACs on the hunt. SPACs are something called special purposes acquisition companies. And what that does is that's essentially a private equity company that accesses the public market for their funds to be able to buy other companies and consolidate them. It's a public-private equity model, essentially. There has been a lot of those types of investment vehicles and funds raised in this industry, and they've raised almost $3 billion so far. The challenge is, who are they going to buy? Who are they going to consolidate? And can they even close on those transactions given the current environment? This is very important, this next point. Essential does not mean invincible. I think the cannabis industry nationally is being sort of a bright light in an overall dark market. However, we're still in the beginning of this. Lower burn rates, and they need to preserve cash. So if this pandemic lasts longer, consumers are going to think twice about spending $150 at the dispensary, $100 or $50 at the dispensary. Right now, I think cannabis is essential. 6 months from now, if we're like this and everyone's wallet really starts to get hurt even further than it is now, cannabis may not be that essential. To that point, if we go down this road too far and the pandemic lasts longer, the black market's going to regain strength, especially in states where the adult use market is legal. And that's basically because the lack of enforcement and then the disincentive to purchase cannabis illegally just isn't there. So you're going to see a rise in black market activity. The industry is fledgling, and COVID has the potential to create an opportunity for mass consolidation for a few remaining big players. You know, this is kind of, I think, a sad reality that we're facing, that you see all these small independent cannabis companies start to run out of cash. They're going to get acquired by bigger companies, and we will go from an industry that has many brands, many locations, many store types, to one that has few in the span of 3 years. Like, this event is setting cannabis up to go the same route as liquor in terms of Diageo, right? You're going to see all these brands, all these stores that are one flag because they just don't have the money to survive right now. However, we come out of this stronger. There will be a bigger push towards friendly regulations, federal legalization, and access to banking. That's going to become a higher collective priority for this industry, and it needs to bind together and move in lockstep to determine what's important. And what's important is the survivability and the thriving of the key parts of the value chain, which are cultivation, processing, and retail. Without the survival and growth of that engine that drives the cannabis economy, we're not going to do any well. So we need to sort of buy behind those kind of operators and make sure that they survive and have the kind of legislation in place they need to thrive. And I think that's it. Yeah.
Awesome. Nailed it. I actually went ahead and I took the link for your company, Sal, and I dropped it in the comments in case some of the businesses are looking for a little bit of insight. They want to reach out to you just so everybody can check it out there and see.
Oh, no, thank you. Appreciate it.
Well, I appreciate you joining us and doing this. It was nice to kind of see. Unfortunately, you know, some of the things have dipped, but there are opportunities still. I know even as nonprofits, we are, you know, definitely feeling the hit and trying to look and see how we can diversify so that we have enough funding for the next legislative session. So you speak to almost everybody's current concerns right now. So
yeah, I know. I mean, we'll get through this and we'll get past it. It's just, you know, we're lucky now. And I think the main point is we're lucky now. The cannabis industry is doing well now, but as this drags on, it will feel the hit like every other industry, unfortunately.
yeah. Well, thank you so much for sharing all of your knowledge with us, and we will see you again soon.
Thank you for the t-shirt.
You're welcome. Thank you. I was